What's up, guys? My name is Jag. Welcome to Invest Today. Today, we're going to talk about pot stocks. And this industry, this market of pot stocks, they've been just taking off, and it's an absolute bubble. I'm telling you today to not buy the pot stocks. I'm going to tell you the reasons I think not to buy them, where that industry is going to go in the future, and if you want to get in on it, how to get in on it. Like a much better alternative to just buying a pure play pot stock. So first off, as a value investor, the PE ratio is something I take into great consideration. A lot of these stocks, they have an absurd valuation. They're trading at PE ratios well above 100. And, I understand they're growing a lot, but I still cannot justify that valuation. When you take a look at the short interest, like the percent of short interest, pretty much they see all the shares that people own outstanding, and then the amount of shares that are sold short. And if that is above 10%, and a lot of these pot stocks are like 20, 22% short interest, it makes me very nervous, and I will not buy a stock if the short interest is above 10%. There's just way too many people betting on it going down, and people making profits on when that stock does move down. It really pulls the stock down, and I will not get in any stock with short interest above 10%. Furthermore, these companies aren't making revenue, and the ones that are, it's very, very, very small. It's not like an established company, a Facebook, or even smaller companies like chip stocks or whatever. They're all posting great revenue. These stocks really, these companies, they don't have any revenue to speak of, and I understand it's shifting towards legalization, and they can expand their market as like the United States becomes legal and other countries like that. But right now, they don't have any revenue, so I can't justify them selling at 100 PE. If you look at a company like Amazon that has a 79 PE, that company has a revenue. It has established businesses, and I can justify a fast grower like Amazon at a 79 PE. That's fine. But these companies with no revenue, trading at well over 100 PE, I just can't do it, guys. It's not a safe bet. And way too much money has flown into these stocks. And you already see that they're down in a big way. Like Tilray, for example, the high flyer, which is up over 600%, since its IPO, it's down in a big way. It's down 20%, then it was down 30%. And it's a little bit too volatile right now. It's a bubble. It's a lot like the 3D printing space was in 2012, 2013. Go take a look at that, and you'll understand what I mean if you were in the market then. Go take a look at those 3D printing stocks. See how they shot up so fast and they shot right back down. Lastly, now it's not legal yet. I understand that it's going to more than likely be legal across the majority of the states in the future. But as of right now, it's not. In Canada, it is. And that's where a lot of these companies are based out of, and they're doing business in Canada. But it's not legal in the United States. So it will be legal more than likely in the future. And it's good to have that forward-looking thesis, but we don't know when it's federally going to be legal. We don't know when the majority of states are going to get on board. Could be in 3 years, could be 5 years, could be 10 years, maybe never. Maybe a strong pushback comes back out and it just never becomes legal. So we really don't know. So what I think you should do is you should buy into Constellation Brands. Ticker symbol STZ. It's a company I own. I own it for a client as well. So I truly, truly believe in this company. I picked it up at $202 a share. We're up over 8% on that position already. It bounced back greatly, and it dropped because they bought Canopy. And Canopy is a large cannabis. It's probably the best of breed cannabis stock. If you wanted to do a pure play, I'd recommend Canopy. But I really recommend buying Constellation. They own like Corona, a bunch of wines. They own some whiskeys. They kind of have a whole a portfolio of like Havakas and drinks and alcoholic beverages, which is an established space. They have a bottling industry, and they have a supply chain to go from Constellation brand factory to consumer. It's already established. Their bottling, all that, their distribution, all that stuff's already established. So that is a much better option. They're trying to make a play on cannabis-infused drinks. So it could be alcoholic coupled with cannabis, or it could just be like a soda with cannabis in it. They could do that transition as well. And they're going to take different angles on it, but that's what they're going after in the future. And I think that's a much better option because it's already established. They have revenue. They have a PE. It was on a dip. It's currently below 200-day. I think any price below 200-day is a great price right now to pick it up at. So I truly recommend buying that one. We'll go into examples later. And lastly, on Constellation Brands, kind of as a parting shot, is the CEO and the management team is fantastic. It's another company with awesome management, and it's something I truly look for in a company. So let's go take a look at these examples to see exactly what I'm talking about. Okay, so right now you can see Canopy Growth, and honestly, they're the best of breed, that I've really looked into. And they're trading at around $50 a share, and they're down 5% currently. And this is at the close of September 21st. So when we take a look at it, we look at their 52-week range, $16 to $56. That is absolutely ridiculous. That's like a crazy range, and even when you consider 49.40 for the days range to 51.59, it's a pretty large range. So it's just showing us that it's a very volatile stock, and there's nothing wrong with that, but it's definitely something to be aware of. Now, when we take a look at the PE ratio, we see it's not applicable. When that's the case, or it's a negative number, that just means that they're not posting any revenue there, so they're actually losing money. And when you look at EPS, ETM, trailing 12 months, you see it's 0.57 to the negative, which is also showing you that they're not posting any revenue. They're actually losing money on this company right now. And honestly, like I said before, guys, some good fundamentals is I've lost more money on companies that are not profitable than companies that are. It's not even close. So that's just something to really take in consideration. And this is when you're looking at the best of breed of pot stocks. So Canopy Growth honestly isn't that bad when compared to the larger cohort of pot stocks. We see that shares short is around 18 million as of July 30th, and then August 30th, it's around 10.5 million. So, a big downtick in people shorting the stock, and that is honestly because of Constellation Brands buying Canopy Growth. That's definitely something to take into consideration, and it kind of proves my thesis before that a lot more people are believing in Constellation and Canopy Growth now that they have teamed up, compared to when Canopy Growth was just a company that was alone. And honestly, their short percentage is only around 5%, slightly over 5%, and that's a lot better than a lot of the other companies that we're going to go into in a couple minutes. This video would not be complete or legitimate without taking a look at Tilray, the high flyer of pot stocks. We see that it's down 30% in one trading day. I don't know about you guys, but that is way too much risk for my appetite. So again, when we look at their PE ratio, it is not measured because the company is not making money. They are in fact losing money. They have a negative EPS of 0.30. They do not pay a dividend, not surprised there. So overall, when you see this, we just see a lot of volatility. And when you take a look at the chart as a whole, you see a quick pop, kind of reminds me of cryptocurrencies, but on a shorter scale. And now that we see the great decline in Tilray that has started kind of to where it was trending up. But when you just cut out that bubble, that kind of quick pop that it had, it's kind of just trading flat as of right now, guys. Right, guys, so I just wanted to take a look right here. We'll start on the left under profitability, looking at the profit margin is negative 80%. And I just wanted to point that out to show you how crazy that is of a profit margin and how high this stock is trading at $123. That this, based upon the profit margin, definitely does not justify the valuation of $123 with a negative 80% profit margin. And that same goes for operating margin, which is pretty much negative 70%. It's just kind of ridiculous when you look at it as a whole, guys, just kind of proving this bubble thesis by myself. When you take a look at the Tilray short percentage of float in August 30th, 2018, it's a 21%. Automatically, that is above the 10% marker, and it's above the 5% marker of Canopy Growth. And I think a lot of the reason to do of this fact here is that Constellation Brands bought Canopy Growth, and a lot more people are betting on both Canopy Growth and the Constellation cohort with Canopy Growth. Those two together are a much better option than, let's just say, Tilray as a whole. And you can see this kind of expressed in the short percentage that we see here. The short ratio is a 0.7, which is extremely high. And it's just something to take, definitely, if you want to go invest in this, I would say just be aware of the risk. And I think the risk is really highlighted when you look at their short percentage of float here, guys. So when we take a look at Constellation Brands, ticker STZ, we see a very different story. We see a PE ratio of 16, which is undervalued compared to the broader S&P 500, which is trading at 25. We see a positive EPS number, and we see a dividend. And that's something we don't see in any of the pot stocks. That's just kind of something I wanted to point out really quickly, guys, in terms of investing. And especially if you guys don't have a lot of money to kind of play around or throw around, this might be a much better option if you wanted to do a cannabis play for the future in terms of a long-term investment. I believe this is a great option, and I own it for myself and for clients. As we can see, guys, we see a big sell-off, and that's kind of where the first downward arrow is. And it got all the way down to kind of the $200 mark. I picked it up at $202 even. And as we can see, it found its bottom again, as I said, right, maybe under 200. It was trading intraday, and now we can see that it has kind of found its floor support and began moving upward. We see the up arrow that I have put kind of in the middle there. We see it break the 20-day, and we see it break the 50-day moving average. And the key technical indicator that I see here, guys, is the 20-day is crossing the 50-day. We furthermore see that the stock has began to move up and test the 200-day. That's the pink line circled kind of at the top of the screen. And what I believe is that, it found its resistance at the 200-day and it began moving back down, but it will begin, I believe, to find support, especially if the 20-day stays above and crosses the 50-day and it passes that test. From there, I believe it'll begin bouncing around in between the 200 and 20-day and eventually breaking through the 200-day and beginning a longer-term positive uptrend here, guys. Thank you, guys. Please click the subscribe button right here. Throw me a like, throw me a comment. What did you think of this video? Are you bullish on pot stocks? Are you bearish? Where do you line up? Let me know, guys. Thank you, and I'll see you next time.